Hello and welcome to this video about the Indian stock market. The stock market can be a complex and intimidating topic, but it's also an essential part of the economy. In this video, we will cover everything you need to know about the Indian stock market, including how it works, how to invest in it, and the risks and benefits involved. What is the stock market? The stock market is a platform for buying and selling stocks and shares of publicly listed companies. When a company decides to go public, it offers a portion of its ownership to the public by issuing shares. Investors can buy these shares, which represent a portion of ownership in the company. The stock market allows investors to buy and sell these shares, with the price of the shares determined by supply and demand. How does the Indian stock market work? The Indian stock market is governed by the Securities and Exchange Board of India, SEBI. There are two major stock exchanges in India, the National Stock Exchange, NSE, and the Bombay Stock Exchange, BSE. These exchanges are where investors can buy and sell shares of publicly listed companies. There are two types of markets in the Indian stock market, the primary market and the secondary market. The primary market is where companies issue new shares to the public through initial public offering, IPOs. The secondary market is where investors buy and sell shares of publicly listed companies. How to invest in the Indian stock market? To invest in the Indian stock market, you will need to open a Demat account with a registered stockbroker. A Demat account is a digital account that holds all your stocks and shares electronically. Once you have a Demat account, you can start buying and selling shares through your broker. Before you start investing, it's important to do your research and understand the company you're investing in. You should also have a long-term investment strategy in place and diversify your portfolio to minimize risks. Risks and benefits of investing in the stock market. Investing in the stock market can be risky, and there is no guarantee that you will make a profit. Stock prices can be volatile and can fluctuate based on a variety of factors, including market conditions, economic performance, and company-specific news. However, investing in the stock market can also be very rewarding. Over the long term, the stock market has historically provided higher returns than other asset classes. Investing in the stock market can also provide a hedge against inflation and can help grow your wealth over time. How to get started? Now, the next question that comes to mind is, how to get started in the stock market? Firstly, you need to open a Demat and trading account with a registered broker. Once you have your account, you can start buying and selling shares of publicly traded companies. But before you start investing, it is essential to do thorough research on the companies and their stocks that you are planning to invest in. This research will help you understand the company's financial health, its performance, and growth potential. How to make money in the stock market? Now, the big question is, how to make money in the stock market? There are mainly two ways to make money in the stock market: capital appreciation and dividend income. Capital appreciation refers to the increase in the value of the stock over time. As the company grows and its profits increase, the stock price also increases, giving you capital appreciation. The second way to make money is through dividend income. When a company earns a profit, it can distribute a part of it as dividends to its shareholders. This dividend income is a passive income stream that can provide you with regular income. Risks associated with stock market. It is essential to understand that the stock market is not a risk-free investment. There are risks associated with investing in the stock market. The stock market is highly volatile, and the stock prices can fluctuate significantly in a short period. Moreover, there is no guarantee of return in the stock market, and you could lose money too. Therefore, it is crucial to invest wisely and have a well-diversified portfolio. In conclusion, the Indian stock market is a complex but essential part of the economy. By understanding how the stock market works and how to invest in it, you can take advantage of the benefits of investing in the stock market. However, it's important to do your research, have a long-term investment strategy, and diversify your portfolio to minimize risk. Thank you for watching, and I hope you found this video helpful.